I'm Zoran here from Hot Property Buyers Agency and Your Empire here in Brisbane. This month for the June monthly update, I am joined by Chris Gray from Your Empire in Sydney and Lauren Staley from Infolio and Your Empire in Melbourne. How are we going, everyone?
Yep, good to see you. The sun's shining again in Sydney.
I'll say the same.
Right.
And it is horrendous down here today.
It's so cold in Brisbane, I've got to wear a cardigan. How about that? Let's get straight into the property news. As we head towards the end of the financial year, I personally have started to see a lot of chatter amongst investors when it comes to end of financial year. Probably talking a little bit about strategies around tax and also buying or selling and what they might need to be doing in the new financial year. Chris, did you want to touch on any of your thoughts around end of financial year strategies investors might want to consider while we've got a couple of weeks left?
Yeah, look, I think one of the things to do is always speak to your accountant before the 30th of June comes around, just in case there's any other things you should be doing. Maybe speak to your property manager just before that to say, look, if the accountant was okay, is there any renovations that we should do before then, obviously even with tenants in there? Because all that really means is you get the tax deduction this year, whereas if you do it on the 1st of July, you've got to wait another 12 months to get that expense back. So if you're spending the money, ideally you want to get maybe a third, a quarter, or even a half of that back straight away. Also speak to the accountant about maybe prepaying interest. And again, this is for people that have maybe got excess cash flow. They may be on their higher tax limits, and so they can bring forward some of those tax deductions as well. But again, it's always worth having that quick conversation. Only needs to be about 5 minutes, both with your property management and with your accountant as well.
Yeah, Lauren, what about you guys in Melbourne? Do you guys sort of chat to, I know obviously you've got a great rent roll property management team down there. Is these the sort of discussions you're having as well?
Look, we tend to stay away from providing any advice that's outside of the property realm. So just like Chris mentioned, we're very keen to make sure that our clients seek professional advice from a taxation accountant and the professionals that looking after them, whether it's their mortgage brokers, accountants, or financial planners. Just gather all that information, but don't do it this late. It should be done much sooner. So really you should start thinking about this stuff, or your accountant should be reaching out to you really in sort of March, April to start getting everything ready and prepared.
Yeah, you'd think so, wouldn't you? So if they're not, maybe it's time to start having a review of those consultants. Yeah. Make sure you've got the right consultants around you. That's exactly right. Exactly right. Chris, should we jump into some stats and see how the market's progressing statistically speaking?
Yep. So I'll just pull up the CoreLogic results for up to the 31st of May. So for the month, the quarter and annual, very, very quickly, for Sydney, it's 0.6 for the month, 1.2% for the quarter, and 7.4 annually. Melbourne is 0.1 for the month, minus 0.2 for the quarter, and 1.8 annually. And Brisbane, obviously cracking it there, 1.4 for the month, 3.9 for the quarter, and a whopping 16.3 annually as well. And look, this is data you can pick up. Quite often they release these in the media anyway, but you can just do a search with CoreLogic. But look, what it really means is the market's still moving. We always talk about these are the average results, and so obviously in the blue chip suburbs where all three of us buy, quite often you might be getting 5 or 10% growth there. There may be 5 or 10% drop somewhere else, which gives you that average of 0, but the market is still moving. We've shared all throughout the last 12 months of the financial year that we're all short of stock. There's still plenty of demand from people that have got money. And sure, look, some investors are selling, but there's still a massive demand. And that's what pushing the prices up. So even if you're dropping a couple of percent on $1 million property, i.e. 10 or 20 grand, or maybe even 30 grand, if the market's still moving at 5 or 10% a year, you're still actually making money. Sure, the cash flow's hard, but your net wealth is still actually increasing.
Yeah, for sure. And Lauren, how are you finding the market's progressing towards the end of financial year? And I guess into winter as well, seasonally, seeing much of a change?
Well, it's interesting. Even if we just revert back to the stats that we were looking at before, I was in a Melbourne property market update only last week. And if we look at our eastern suburbs, they have grown by sort of between 10 and 15% per annum. So we're having huge amount of growth in certain areas of Melbourne, which is just not represented in this data or in the media and what you're hearing on the news. I think that I'm definitely a glasses half full person, not a glasses half empty. And whether you're going into winter or you're going into spring, there's always opportunity. So if you're a buyer in winter, there's less properties, but there's less competition, buying competition. If you're a seller, there's less properties competing with yours that's being sold. So, when you go into spring, there's going to be more properties competing with yours. So really, I think the key to it is you buy or you sell when you're ready, not when the market tells you, not when anything else happens, but when it feels right to you. That's when you should be making a change or making a move in the property market.
Yeah, for sure. I've always had the mantra of it's time in the market, not timing the market. And I think that's exactly right. I think here in Queensland as well, as we head into winter, we actually start to see those southerners start to come up, and our coastal markets actually have a bit of a midwinter boom with people escaping the cold. And so I think we're going to start to see a little bit more of that. I know that our service offering definitely represents that as well. We've got a Gold Coast and Sunshine Coast inquiry starting to ramp up a little bit for our buyer's agent services in those markets. And we're also seeing investors, I think, start to come back to the Brisbane market as well. And when you look at those stats of growth, that as a buyer's agent, that's something for me that I need to really be mindful of when we're evaluating property. I'm finding buyers in the market are coming to me after, 6 or 12 months of searching and inspecting properties, and they just keep missing out. And I feel that one of the key reasons is they're not factoring in the constant growth that we're seeing in their offer that they're putting forward. So they're 3 to 6 months behind the market when they're putting their best and final in, or whether they're evaluating their maximum price at auction. And auction clearance rates as well, interestingly, from what I'm seeing, have actually softened a little bit. Results under the hammer are a little bit softer. So I think there's an opportunity for buyers there to get out there, especially if you've got your finance ready to go and you're confident with your opinion of value. Here in Queensland at the moment, like I've been saying previously, bidding at auction actually isn't the worst thing in the world, because if you know what you're doing, you can get a great buy.
Yeah, so certainly for Sydney, we almost don't look at the auction clearance rates because it's just such a nightmare that, especially for investment property, then we've got to buy it off market. It's just the only way.
Yeah.
Yeah, for sure. So moving forward, obviously in the media at the moment, there's a lot of speculation regarding interest rates potentially rising, falling, staying the same. I know there's been a lot of commentary around this. Chris, what are your thoughts moving forward? What's your crystal ball telling you?
After 10 years of Sky News, I still say don't listen to the media. It's just not worth it. Everyone's got a comment, and the less, I guess, successful they are, the less they've got a good name, the more louder they're going to speak to try and go and get some airtime. Yeah. And look, it's not to say that all the economists out there are saying stuff to scare us to get a name out there. Obviously, some people have got a good name. But the thing is, it constantly changes. And so the property market is very much about investing for decade after decade after decade, where all of us are into no selling, really, when it comes to investments. You can't chop and change your ideas every day. It's a moving thing. I know now that, sure, it might cost you 20 or 30 grand to hold $1 million property. But if it makes 50 or 100 grand, you're still ahead. It's really a cash flow game. And it is a game in a way, property investing. Sure, it's a business, but you've got to kind of game it, and you've got to play with the ups and downs of the market, because over 30 years, we're going to have 10 or 11% interest rates. We're going to have 2 or 3% interest rates. Same with the rents. The rents used to be 5%. It was great. It was 12% in the UK, whereas now in Sydney, they're down to, say, 3.5%, 4%. And that's all part of it. You're never going to get the perfect storm. And that's why the common thing is, if you've got the money to invest now, you've got the deposit, you can get a mortgage, now is the time to buy, because otherwise you'll regret it in the future.
Isn't that one of the key things to what you're saying there as well, though, is it's that fundamentally comes down to the structure when you're looking at buying a property. If you seek independent professional advice, you'll understand from the outset what it's going to cost you, what the ebbs and flows might be, the peaks and troughs, like there is with any investment, so that you then are not afraid and you don't face fear each time there is an interest rate increase. Now, don't get me wrong, we've had 13, so it's slightly different to what I think any of us would have expected. But if you go and meet with professionals, you'll be told that these things will happen. And so I guess it's about expectations. So then the fear is removed in what happens if the market does change when you own property.
And also, when you talk about seeing professionals, it's not just seeing any professional, because I've been speaking for the accounting bodies for 20 years. I've been speaking at the banks, at the private banks. Most of the people don't know what we're doing because they're into the classic stocks and shares, buy a home, pay it off over 25 years. Is you've got to deal with people that are dealing with investors all the time, or that are actually investors themselves. Because, again, I did another speech at one of the accounting bodies literally a week ago, and 99% of people wouldn't understand all the ups and downs and the intricacies of what I'm trying to say.
Yeah, for sure. And I think one of the other things we're seeing here in Southeast Queensland at the moment as well, with the slightly higher interest rate environments that we're in, is the fair weather followers who are just trying to find the next hot thing, right? Or the next trick to try and succeed in the property market. At the moment, it's, dual occupancy or rooming accommodation, or, these sort of cash flow orientated investment strategies. And we didn't hear a word of that 5 years ago when interest rates, or 2 to 3 years ago when interest rates were lower. But now these kind of salesmen are back in the market. So I think investors, you need to stick to your guns. The core fundamental of property investment is capital growth. The side dish is your depreciation, right? And I think that's the core fundamental when you're looking at long-term property investment. Don't get caught up with the fads of buying, the current latest and greatest thing, because what we find is they often just don't work. Mm-hmm. So any closing comments, guys? Any thoughts to round out the end of financial year?
I think for Melbourne, even as a business, we work off a 10-month budget because we assume that essentially everyone's going to go up north or go to Europe in July, and they do the same in January. So we're definitely expecting it to wind down. But that can also be an opportunistic time, because typically speaking, this is a period in which agents, the ones that are still working, will present buyers agents like us with opportunities that are coming to market in spring. So although the opportunities will be thin on the ground, they can be some pretty amazing homes presented to us that will come to market in spring if they don't sell now. So although it will be quiet, if you've got your finger on the pulse, you'll still get some good opportunities to consider.
Yep. And I think it's business as normal. Even though we keep doing this monthly update, in reality, the monthly update it's the same as it's been for the last 10 or 20 years. Sure, a bunch of things have changed, but the fundamentals are still exactly the same. And again, I think February, we go through our database and we survey them and say, what's your biggest regrets? What do you wish you had done differently? I wish I'd bought more property. I wish I hadn't sold. I wish I'd done it sooner. It's the same year in, year out, but it's great to read, because that really is the thing, is you've got to be in it to win it.
Yeah, exactly. Well, no worries. Thank you very much for your time, everyone. Thanks for watching the June market update. Chris Gray from Your Empire in Sydney, Lawrence Daly from Your Empire and Infolio and Melbourne, and myself, Zoran Solano from Hot Property Buyers Agency and Your Empire here in Brisbane. Please reach out for any of your property needs, whether you're buying, renovating, or need assistance with property management or vendor advocacy. We would love to help. See you next month.